Good afternoon, traders. John Caruso coming to you here. Today is Thursday, October 4th. We're here to wrap up an action-packed week so far. Tomorrow, of course, is the unemployment number here in the United States. And along with me to discuss the number and some of our projections for tomorrow is Jeffery Friedman. He's here to discuss the stock indices. Bob Haberkorn here to discuss the metals markets. Kevin Craney to discuss the interest rate markets. And of course, I'm here to discuss the currency markets. I believe we're going to kick it off with Jeff here to start about the stock indices.
Thank you. We're looking for 120, 130. It could be as low as 110. We seem to be gravitating around 100,000 plus jobs creation throughout the United States for our non-farm payroll. Unemployment is kind of around 8%, 8.1, where we've been around that level for a while. So we're looking for about 120,000. I don't think that that's a great number, but I think that if we get above that, the market will share. All the central banks have been doing stimulus. We've been in a I don't want to say a bull market, I want to say it in an uptrend according to the charts, higher highs, higher lows. In the last couple of weeks we've pulled back a little bit, but it's really not so much that we're creating a lot of jobs, it's that they're pumping a lot of money or trying to stimulate each economy globally, if it's Japan or America or what. So have said all that, if we get a big number like 150 or better, maybe it has to be 180. We'll probably try to test the highs in the stock market index futures. And if we get under 100,000, I'd have to say under 70,000, we will probably break the consolidation area that we've been in. And that's how I feel going into this report.
But Jeff, this is just crazy that we're talking right now in the United States of America that we're going to celebrate, the market's going to celebrate a good number being 150,000 to 120,000 right now, jobs created for the month of September. The bar set low, like you said, at 116,000. But, I mean, just to keep up with the pace of people leaving the workforce through natural causes or, retirement, I think it's 180,000 is what or 160,000 is what has to be created. I mean, this is horrible. It's horrible right now. And then going back that the only thing holding up this market right now, the S&Ps are as high as they are. I hear all the time, oh, the stocks are doing great. Everything's, I hear it a lot. Not just, in the office or, on the street. You hear it all the time. Stocks are doing great. Things are not that bad. But in reality, you nailed it. You said it right there. It's the Fed, central banks stimulating. It's fairy dust right now. And I think the equity markets tomorrow, it's going to be pretty interesting number. I've been thinking about this for about a week or two. I know we talked about it earlier with what happens if the number misses big. What happens if they're expecting 116? What's going to happen to the bonds, the currencies, the metal markets, which we touched on a bit? If that thing comes out 20,000, 30, 40, maybe even negative. I mean, the Fed said 2 weeks ago.
We get a correction. You get a.
Is it a 100-point correction? Is it a 500 move in the Dow?
That's anyone's guess right now. I think tomorrow's number is certainly going to set the tone moving forward. We get a great number. Let's say we get north of 140 jobs created tomorrow. I think that sets the tone for S&P 1500. I think if we get a very disappointing number, we're going to see it probably correct back under 14. But I think the correction will be short-lived. I really believe that.
I mean, for the market to celebrate a number of 140 or 150 is, I mean, it's crazy. It's bizarro world. When the sugar high runs off, this is not going to be pretty. Unless no jobs, we start getting improved situation.
Yeah, I think you have to look at the data through September as well. And each economic number that's been coming out has been looked at really through a prism, through an economic prism as well as a political prism, given the environment that we're in right now. But the number certainly is going to be lower than what we need to actually keep up with the pace of the unemployed in this country. But if you get anything, in my opinion, below a sub 90,000 number, I think you're looking at a sell-off. And really, if you look at the bond market, both the 10-year and the 30-year, post-FOMC announcement, we've seen a rally in the bonds because when traders are looking at the market, they're looking at really a global economy that's stagnant and it's on its back. We've seen a lot of stimulus from central banks across the globe, and it really hasn't added the effect yet to what we need. Yet is the key word. I'm not sure it's going to have the same power as it had whenever the whole crisis started, but it's certainly something to keep an eye on. And I do think this number is really going to add just a little bit more fodder and maybe not have the real power that it really needs to boost the market.
Right. So, sure. So if the market, let's say the number disappoints tomorrow, we're going to see flight to safety, treasury bonds, flight to safety, maybe back into the U.S. dollar. I think it's complete risk off tomorrow if the number does disappoint. Let's say the market, let's say the number comes out in line with expectations. And say we get 120,000 jobs created. Where do we see the market from that standpoint? I mean,
well, it should just, in my opinion, it should just keep going, just as what it has been doing. At least for the stock indexes, it's looking at the charts alone, where we're basically been going up in the last 2 months. So this would be status quo. We've had a little pullback after they announced QE3, and we've kind of pulled back. We're in a trading range. I think that we'll stay in that trading range, that consolidation area, if it comes in right in line. If it doesn't come in line and we get a big number or even a very, very disappointing number, I think that traders could use this number to enter the market if they're bullish or bearish, depending on what they want to do, and use that number as noise, because I don't think, unless it's an extreme, I think that we'll stay in that pattern that we've been in, which is a trading affair, and there's a lot of money to be made if you can get on the right side of that range. So that's how I'm going to suggest to clients.
And I'm looking at it, this number going into, I'm looking at probably to come out a little less than expectations with the bar being set so low. ADP out this week, I think they anticipated 136,000. They've been a little high on the high end for the last couple of numbers, I believe.
Yeah,
so we'll see how it comes out. Gold and silver, I anticipate we're probably going to get the flight to safety mentality on this number regardless, unless it just shocks, comes out above 200,000. Probably see gold test up to that 1,800 level. Silver, I look for both to be heading north here. We'll see how it comes out here tomorrow. But I'm looking for some pretty big moves here in silver and gold towards the year, just based off central banks, what we touched on earlier.
Sure. You mentioned ADP. ADP actually came in very strong this month, or on Wednesday. We saw it come in 162,000 jobs created in the private sector. The market was looking for 140, but historically that has not been a good indicator for the unemployment number.
I agree with that.
Due out on Friday. So I think regardless, if we get a number that comes in line with expectations, 8.1% unemployment, I think regardless the market rallies. I think it's full risk on tomorrow if we do get a number in line. If the market severely disappoints, I think the market heads lower. I think it's as simple as that.
Well, if history is any indication over the last month or two, good news is bad news in this environment right now. As crazy as that sounds to the market, probably will rally a little bit. But if it misses, I think look out. Look out below.
If it does miss, certainly watch that bond market, both the 10 and the 30-year, the longer end of the curve particularly. You see highs right now have been made around 151.25 or so. I think you can easily take that out if it's a bad number and you can go to new highs, yields back at new lows. But if it's a good number, if it surprises to the upside, say watch out, because we're in a pretty wide trading range for the 10 and the 30-year, and there is an implied floor really on these treasuries. So I would caution people not to get too excited if we start to run too low, because they are still in there buying. They are still going to be active. So it can only go solo at this point because there is a bid in there as well. So there's some important dynamics to keep in mind whenever we're looking at the bonds and how it all implies into this report for sure.
I'm glad you brought that up, because that implied floor support level in the bond market, and correct me if I'm wrong, I think that that's coming from that open-ended phrase, if you will, for QE3. And looking at the metal markets, if we get a very disappointing number, and I believe that the stock market would, stock index futures will probably sell off in a correction of their uptrend for the last 2 or 3 months. But looking at gold, I think the safe haven might kick in, meaning they'll be printing open-ended. They'll do this QE3 for, instead of 5 months or 6 months, it might now take 9 months. And of course, the inflationary thought behind the gold market or safe haven would catch the bid. So, and I could be wrong, but that's kind of how I'm seeing with that open end.
Scary stuff, because what are we on, iPhone 5? By the time this stuff hits the market, maybe iPhone 8. Hopefully we're not going to pick up that iPhone 8 with a wheelbarrow full of cash with all this money they're printing. So In wrapping everything up today, it's going to be interesting tomorrow morning, that's for sure. A lot of different ideas out there on how this thing will play out, but we'll find out tomorrow morning at 7:30 Central. Remember, follow us on Twitter, follow us on Facebook at RJO Futures here. And remember, futures trading does pose significant risk. It's not suitable for all investors. Happy trading and get ready for tomorrow morning.